Bain Capital, with a global AUM of or assets under management of $187 billion, is keen on increasing the pace of India investments to $7 billion in the next few years. Our colleague Nisha Poddar caught up with the top team on the investment strategy they have in India. Bain Capital says it's India's moment due to political stability and structural reforms. Listen in.
We definitely think it's India's moment right now. I think it's the convergence of some trends that have been happening for a number of years. The first are some really powerful structural changes that have been made to the economy. Difficult to do and have taken time to manifest the benefits. But you're seeing that now with the ease of doing business, with the focus on some of these manufacturing, high value-added content type industries, which tend to pull along logistics, distribution. It pulls along consumer spending. You've seen this positive, kind of virtuous cycle of growth in other Asian economies, and that's happening in India now. The second is political stability. I think it's not an overstatement to say that this is a country that has maybe the most stable government set up right now. It's, I think, the first time since the early 1960s when you had a leader almost to be on a third term. And that's really important. It leads to consistency of policies, the ability for long-term investors to make those bets on the India consumer, on infrastructure, in other areas. And third, as Pava was mentioning, you're kind of in the second generation of investments. You have great entrepreneurial Indian families and corporations who launch businesses that have grown a lot, and they're now ready to in some ways turn them over to new owners to think about the next generation of management. And this is a big trend that we've seen in private equity markets in the US and then in Europe and then in Japan, and now you're seeing it in India. Put all those things together and that gives you a very, very powerful mix to support growth. And that's why I think everyone's really excited about India.
A very big exit has been made after 6 years in a large bank, Axis Bank. How has that particular experience been? And in terms of returns, how do you see that? Will that also encourage you for more bank investments?
Sure. No, it's been an incredible journey in partnership with Amitabh and the team and the board. When we invested in Axis several years ago, at the time, it was just coming out of a lot of the infrastructure lending related challenges. It was a bank that I think at the time had 5% ROE, gross NPAs north of 5%. And if you look at the last quarter, they had some of the best numbers in the street, right? 19% ROE, 23% growth, gross NPAs at under 1%. So it's been an incredible transformation, and I think we've been really lucky and to be able to partner with that team and support them through that journey. The stock price is up more than 2x from where we invested. So it's been a great partnership. We're really happy and proud of, I think, what we've been able to do with the team there at Axis. And I think it also has given us a great insight and view into the broader economy and financial services that we hope we'll leverage into more investments in that space.
But financial services is something that you have been focused on, like 361, a more recent investment of yours. What are those potentials and propellers that you see in this space and the company?
Yeah, no, 361's another great example. Karan and Yatin have built a great business. It's really a play on wealth creation in India, right? And as that wealth looks for professional management and investments into more alternates, and 361 is the market leader in that space. Just as a statistic, AIFs, which are alternates, one of the areas they're a leader in, has grown more than 3x in the last 5 years. And I think they've been one of the pioneers and very innovative, players in that space. And so, we think they're really well positioned and we're excited about that journey. But to your question more broadly, if you look at financial services, they're in a bucket that we call more fee-driven businesses. And we like that space a lot, whether it's across asset management, wealth management. We think insurance could be interesting, especially as we potentially move to a unified license. That may see consolidation opportunities there. Lending has obviously been a segment we've been quite active in across Axis, L&T, more recently Bain Capital. And there's certainly parts of, I would say more specialty lending, whether it's affordable housing, SME, that we think, have really long runway for growth.
Yes.
And so really across that landscape, I think there'll be interesting opportunities. And, these are businesses that need capital over time. So I think it'll continue to generate opportunities for private equity.
Pawan, recently many private equity players have started talking about manufacturing. That has been a capital-intensive sector in requirement of funds, but private equity has steered clear of that. But you have made in the past some investments there in Hero MotoCorp. What do you think about this space, and what's Bain Capital's view for manufacturing investments?
Well, we're very bullish in manufacturing. Like you said, we've been investing in that space, obviously globally, but even in India now over, 14 years ago was our first investment. There's a lot of trends that support that. So clearly China Plus One, made in India, we've talked about. Through JM Bakshi, we've seen some of the investments in logistics that have reduced the cost to manufacture in India. I think there's a lot more capability and human capital development that's happening in India to support, more value-added manufacturing beyond assembly. I think the other piece that's fallen into place is really global interest to invest in scaling India. I think before it was very easy for companies to just say, I have a base in China, I have a base in Southeast Asia, let me continue to scale that. I think what you've seen for a lot of the global reasons, they feel we have to scale India. We need an at-scale alternative for our global supply chains. And we're seeing that in a lot of the companies we look at where, where initially you may not be the lowest cost. I think you have to get to global competitive cost. But investing to scale manufacturing, obviously Apple gets a lot of the headlines, which is, all the investments they've made in their supply chain. We have some portfolio companies that cater to Apple that, we're excited about those prospects. So, as we step back, I think, manufacturing, assembly, and, that spans both electronics, automotive, chemicals to a certain degree as well, even within pharma.
Yes.
We think there's going to be a tremendous growth, and those companies to scale will need capital. And
all right, with that, we'll step into a short break. But on the other side, we have Sudeep Shah of SBI Securities joining in with some trading strategies on the other side.